Hey everybody, hey traders, happy Friday. Uh, Markets kind of choppy today, but a crazy last 6 days of trading. Here is a look at the day. Up, down, up again, up briefly on the day, 0.64% on SPX. And we have the SPY up 0.65. We have the Qs up 0.7. Okay, let's go to the higher time frames here just a moment. Dow up 0.63, Russell up 0.46. Volatility index down on the day. Dollar still up. Let me go to a slightly higher time frame here. Ended up having a overall like an income week. It wasn't an awesome week, that's for sure. I've had about $100,000 swing in P&L over the last 6 days of sliding. So the nice thing is I've got a nice buffer to start out the year. I'm still positioned for a bullish tilt into the next 3 to 6 months. Still have some profit to show for it, which is fine. Took off some hedges this week. Took out some profit this week. So the tail of the tape is something like this. Let's see here. I'm actually going to cancel. I do have a broken wing. See, that one is unlikely going to get filled. That was a 12. Okay, I'll cancel this trade. This trade for $1 at 60.50. I'm going to cancel that trade. I have $1.20 credit in for 2 bull put spreads that are working out pretty nicely for the afternoon. And they are right here. 1, 2, 3, 4. Max profit's $120 and they're showing 107. So I'll just let this go for the next 53 minutes. This should be expiring for full profit. It is doubtful we're going to drop 120 points in the next 53 minutes. So here are the bull put spreads. 58.20 by 58.10, 58.15 by 58.05. Collected $1.20 on that later. It was this afternoon around 12:30. So looking to go below the lows. We had a nice little response with today's range right off of the lows here. So low to high, low to high. Fortunately, that level did react once again. Technically speaking, let's go to a higher time frame. We did pull back into the CPI gap. This is a potential spot for the bulls to step back in. Okay, and I say potential because I think there is still more of a slide ahead. I like where this bar count is at. I still think we find a bar count. I spent all week talking about this. I've got some charts if you'd like to see them. I can post them in my Telegram channel as well. I'll post them in Telegram and Discord. Here they are. So let's go chart. We have earnings next week on the following. Anything that sticks out, a lot of biotech next week. Let's see here. A lot of biotech. OKTA, maybe. I'll put that one on. We got a lot of retailers next week. Target, Best Buy, AutoZone, ON, is that OnCloud? NYAX, CrowdStrike, that's a good one for cybersecurity. Nordstrom for retail. Ross for retail. ChargePoint, no. Abercrombie for retail. Foot Locker for retail. It's going to be a nice little play for the consumer. You know, how's the consumer? What's the forward guidance? How they seen sales? Are they optimistic for this year? Are people scaling back? Lending Tree also stated the consumer. JD.com, that is China. Cracker Barrel for good old dining out. Kroger for groceries. BJ and Costco for warehouses and membership sales. Also retail. That's groceries and, groceries plus, I suppose. Macy's for retail. HP, I don't know if that gets a bid like IBM and Dell, some legacy tech right there. Broadcom, AVGO in the semiconductor space. Okay, so we got some notables. My newsbreaker service will be pricing out this. I didn't take very many trades this week. I took one, and I still have expiration out to next week. I had a winner on Lyft, had a loser on Shopify. Next week, we'll see if we can price things out to look pretty good, favorable. Let's see if we get some expected moves to get hit. So I'll be watching that. Here are a few other images. I'm going to post this in Telegram. I'll just do this now while I'm at it. So let's post this in Telegram. Technical analysis, key levels for indexes. Okay, so I'll drag this. Oh, I guess I can't. I'll just copy and paste it. Okay. XSP. Okay. 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 And okay. See what that looks like on Telegram. All right. If you're following my Telegram, key levels. So you can click on each one individually. This is my DIA. We're sitting here around the 434 level up on the day, just kind of fighting back. I still like the Dow coming back to like the 200 moving average. I think the bar count still matters. And then I'm connecting the lows from August to April to August to the 200 moving average. So it is this low to this low projected out here, and then this is kind of my buy window if we have additional falling. Okay, so that's the Dow. Here's the QQQ or the Nasdaq. Nasdaq has a bit more of a wider area, so April to August, connect the dots there. The 200 moving average is a lot closer to getting touched this week after having 5 or 6 days of selling. If we overshoot that, and this may still have one push up into this area and then one more thrust to the downside. We will find out. So, I mean, this plays out however it plays out. This is either high, low, pull back again for a lower high, and then one more flush. We find the 200 moving average, and that becomes the buy signal, right? So if we go down, pull back, down to a fresh low, this is where I'm looking for a scoop to buy the dip. If we just keep sliding, one up, flush down for some liquidity, look for a cup and handle or bullish pattern, and then get back to the highs again. So we'll see, but just being aware of a bigger area on the NASDAQ. Here's the SPY, a little bit further to go to hit the 200 moving average, plus you connect the April and August lows, 570 to 550 area, and then the correlations between SPX, XSP is just the mini SPX. Same thing, connect the April, August lows, nice little buffer here between 570 and 550, and then the SPX 5700 to 5500, connect the April and August lows. So somewhere in here. Okay, so that's posted in Telegram if interested. And we'll see. Okay. W. Barnes, Dr. Barnes, put in a stop at 20 debit. Happy with it. Very nice. You out of the trade? Did you close that bad boy out already? So this trade right now is closing. It's trading for about a 10-cent debit. Yeah, that's pretty good. So, I mean, it's about a 98% chance it's going to expire with full profit. So I'm just going to let it run until the top of the hour. So that way there's no exit regardless. I'm just trying to let it close and cash settle at zero. So it'd be $1.20. Pretty nice little comeback today. I started out, flat. I think for a moment this morning I was up around like $10,000, $11,000, then back to flat, then down like 12 grand, then back up to $7,000 or $9,000. It's been back and forth and topsy-turvy all week. As far as the recap for this week, I did have a decent list of winners. So after today's bull put spreads, that'll be 12 for 15 this week on daily profit play. Which was an active week. I ended up taking a small loss for the week because of a broke wing butterfly that was not great yesterday. That was a full loss, and that one sucked. But I did have some winners, and it mitigated a lot of it. So even with 6 days of selling, it was minor damage. I also closed out a bunch of hedges yesterday to take some net profit. So 12 for 15 this week on daily profit play. Let me check one thing on my waterfall income service. So I did have a SPY trade. 550. 545. Okay, just checking to see if I have those. XSP, those were trades from last week and this week. Put in a fresh one today for Waterfall. That gives me 10 trades running in total. Starting to think. So daily profit play was 12 for 15, 1 for 2 with the newsbreakers. So we had a winner on Lyft and a loser on Shopify. Then I had a Palantir trade. That was a winner. So one trade ratio spread. I had some hedges running. Hedges I closed out for the SPY for a winner. MES closed out actually 2 for 2. ES, I'm going to let that one run a little bit longer, but I have a hedge in that one as well, still running until April. What else? SPY, ES, SPY, MES. Okay, I've got a winner on IBIT this week, Costco this week, Meta this week, SMH this week. Intel closed out shares and a diagonal spread for profit this week. Japanese yen futures winner this week. Microsoft winner this week. JD.com took some shares off this week. Still have some shares running through earnings into March. And then Altria, I ended up taking a big chunk of profit from dividends, stock appreciation. It was a big one. I bought shares at $39 last year. Had some covered calls at 50 and 52.50. I was able to close that out. Price is trading around like $53 to $54. If I'm capped to the upside, I'm like for my $50 call, it was trading today at like 49.80. And rather than waiting until June to close it, I'm just going to take the 20 cents off and take the winner. So I got a lot of buying power back today, probably close to, see what this will update. Yep. So these are all winners. Took a couple losses on daily profit play, took one loser on newsbreakers with one winner, and then a bunch of other trades that were all profitable. So it was a nice little income trade this week. Earnings, I probably end up adding close to like $130,000 in buying power. A lot of that was due to MO. So I did take off some of those shares. I still have a couple running, so I'll show you here. MO, I still have 940 shares in one account, 900 shares on another account. That would be this one. So I have 900 shares with a covered call at 52.50 out to June, 112 days. I'm still up $11,200 in the position. I don't have to do anything, but if I close it out right now for the full 900, then I can close it out. Instead of closing out 52.50, I close it out at 51.42, which isn't a big deal. But if I go out for $1.08, I'm sacrificing almost $1,000 in profit. So I'm going to keep that profit running. I still have plenty of buying power in that particular account, and that's good. And then the other one, there should be one more account in here. I think it was this guy. No, where's the other account at? MO. This one with 940. This guy. There it is. So there's my 940. I closed out 100 shares at $50 for that 49.80, which only sacrificed 20 cents for 100 shares. And then this one I'm gonna let run a little bit longer. I can get this one called away as close to 52.50 as possible for 940 shares. So that would be, let's say I can close it out at like 52.25. I get $47,000 in cash back, and I took the position for about $39,000. So with dividends and everything, this adds up to be a nice little $11,300 for one account. Trade's been in for most of it's been for a year. I've had this trade for a year, but that's a pretty good mover, and I am taking the profit. Okay, Muhammad, next waterfall online class is Monday. That is correct. Monday at 11:30 a.m. Eastern time. FK, good afternoon. More good afternoon from the Philippines. Hey, I was looking for your email. I saw that you sent me an email. I'm going to reply back. I have a couple options we can discuss. So I'm looking for, let me see if I can find your email here. There we go. Did you send me an email, right? Yes. Okay, I think you did. I just found it. So let me forward that to myself again. So it's at the top of my inbox, and I will reply back. There we go. Okay. Very good. Very good. All right. Yep. I'll reply back. Okay. So all in all, just a week of grinding. Had some winners. Obviously was getting hit a little bit harder. I mean, most of it was just like the option chains. Example being, I have some ratio spreads. Tesla had a nice little bounce today. This was full profit. This one down to 255. We just had such a big drop. I mean, Tesla from high to low has dropped 44%. Wow. For a Mag 7, that's pretty terrible. That's really terrible. Now, granted, pretty sure that we had $1 trillion in Tesla. Now it's down to 931. Let's actually take a look and see how much the market shed this week. Apple got a big bounce today. Apple's still hanging in there around $3.59 trillion. Amazon is $2.2 trillion. Yesterday was an ugly day in Amazon. Google continues to slide, but we're still over $2 trillion. But wow, what a dump. This high to low, almost 19% down from Google. I do have some income trades. This one's out to March, into May, into December, and I'm looking to see if I can just hang in there for some dollar cost averaging. I'd love to see some of the Mag 7s, once they kind of bottom out, are they going to be garbage plays, or are they going to be like, okay, we had the cleanse, it's quality tech, market buys it again, maybe this renewed interest in AI and optimistic outlooks for the rest of the year, maybe. I did post a video on Telegram yesterday, which I think everyone should watch. It helps kind of put in some timing with how this year might play out. I'm going to be pretty protective of a lot of profits by September, October this year. I'd love to have a Q4 that's profitable, just like everyone else, but I'm not super bullish going into 2026, especially if these markets are going to find a way to grind to all-time highs again. So if we are talking about the S&P up around 63 or 6,400, I'm not super bullish going into 2026. All right. Now, if we have a decent 10, 15% correction here, maybe even a 15 to 20% correction here, then obviously positioning for that, I look a lot more bullish going into, let's get back to these highs again. And it might just be like a range. This market might deal with it might be a revisiting of 2015, 2016, when the market had about an 18 to 20% range. And maybe that's what our current environment is. We've had nothing but ups or downs and trends in the last 6 years. So a sideways period that would drive traders crazy because we've all been conditioned just to buy the dip, and freaking YOLO trade. I think that it might be like the yo-yo trade where it just goes back and forth. And if you're a directional trader, you're getting crushed on either side because price isn't going anywhere. You got lack of momentum everywhere. Price is finding lows and highs. It's barely squeaking out higher highs. Lots of volatility and emotionally a very wild ride. So I'm kind of bracing for that. If we flush down lower, I want to be able to time this dip a little bit more, be more aggressive in taking some buy opportunities in that 57 to 5,500 zone, and then look at the other index as well. So, SPY or just the SPY or the S&P in general, the NASDAQ, Dow, and Russell. I actually like IWD and IWX. If I'm going to play the small caps this year, I'm going IWD, IWX. I do have some trades in on IWM, which right now I'm actually curious. I still have some covered calls in IWM that are probably showing some good profit right now. Question is do I want to roll them? Let's see what the profit percentage is. So I have some shares, 225 calls. About 94% of that is in profit already. This is out to March 21st. I might as well roll it. Let's see what this looks like. If I roll 1, 2, 3, 400 shares, my break even's around 192. So I do have some profits in here, about $11,000 on Russell. And obviously I want to see what I can do if I can roll this out. So for $13 and change, 1260 that, 1270 that is already in profit. So I could do nothing, but let me see what this is trading for if I just look to roll it. So if I close this position out, there's still $1 premium left in it, which I don't mind keeping. I just don't want to wait another 21 days to keep that dollar premium when, let me see what a roll might look like. If I roll this, keep the same strike rolled out by a week, I get an extra 37 cents. That doesn't get me too excited. If I roll it down, probably roll, if we have any appreciation, I'd like to keep it around like the 20 delta. So a 20 delta would be kind of my standard cover call. 15 delta is when I'm a bit more bullish on something. But I'm, there's like 15 delta, I get 88 cents. I kind of like, if I'm gonna do something, give me $1. Give me $1. So I could roll this for $1 credit. That adds an 18-cent move. Plus it moves my strike up. This isn't bad. So I could roll it up a strike, so I get $1.19 extra profit, and that's a 17 delta. That's okay. But I have to go. I'm only going out 1 week for that trade, so I still get 18 cents. What's if I go out to April? If I go to April 17th, which is the monthly expiration, the 225, keep the strike the same, get $1.60 for it. That does help. If I roll it up, still get $1.35. Roll it up, still get $1.10. I kind of like this one. Get $1 off my bottom line and also increase my covered call strike by $2. So if we have a recovery, 227 on this thing, 227 would be any type of rip coming back into these highs. I could get it called away by April. Might not be a bad play. So I'm not looking to necessarily get to all-time highs. I'd still flip this thing for some good profit, and that would add in 200 and I guess almost $300 per account. So not awful. All right, I'm going to write that down for next week. So IWM, the 225 roll. All right, I'll look at that next week. Tesla down. Yeah, I mean, I think Tesla is just overvalued. I mean, Tesla, I really think that it's probably longer term going to be one of the most profitable companies in the world. I think the downside is Elon Musk. I don't think he cares about humans at all. I mean, his first instinct with running Doge is to cut government, right? And what are they doing? It's not just like cut budget fluff and scams and frauds and clean up the deals that are going on in the government, but just fire people. It's like that's not the most like tactical surgical way to save money. It's like that's the blunt object. That's coming in with the chopping block. So I'm not saying that Tesla's trading because of Elon Musk, trading down as much as it is. But ultimately, it's like investors are going to have to jump on board with some volatility. This has been one of the bigger drops of the major markets, like major market caps in the Mag 7, down 40+%. But positioning wise, it's like if Tesla is positioned for humanoids to essentially take over and very few people actually running, it's like it could be an extremely profitable company. It can also be not just an automotive disruptor, but also an energy play and an energy disruptor. Who knows? If they start making chips as well, then it disrupts NVIDIA. So, I mean, I think there's a lot of good things to happen with Tesla, but fair market value wise, I think the one thing that concerns me is this. Oops, not FinViz. I need to go Simply Wall Street. Fair market value with discounted cash flow is like $133. So is it a little ahead of itself? Maybe. Right? Profit margin is lower than last year. Major insider selling the last 3 months. Earnings are still forecast to grow. We know it has cash, but the price to earnings is a crazy high multiple. This is what concerns me here. Price at 281, price at 293, fair value at 134. I mean, that would suck, right? But what are its peers? Ferrari still trading at 52 times earnings. General Motors and Ford Motors, 6.6 and 6.3. But the argument is, I don't want to touch those stocks at all. I've got some investments on Ford. I hate that stock. Nothing against the car, nothing against the company, but with their pension liabilities, Ford cannot make money. So even if that stock were to go to like $15 or $20, I would take the profits in a heartbeat. And I mean, I don't think Ford offers much of a dividend, maybe 1 to 3% if you're lucky. Dividend, what? 6.46%. All right. Well, that's better than I thought. If the premiums were better, like that could be a nice little income trade. I don't know. I just don't think this stock is good. I've been sitting in this thing since the teens. I've been using, covered calls and getting my cost basis down. I think my break even is around like $8. So I'm just sitting on profit, but I kind of told myself I'll hold it at 8, see if I get out of here at like $14 or $15 where we had some spikes. Maybe we get another spike, and that's about it. But and again, the whole point is Tesla at 127 times earnings is not what I'm comparing that to like Ford or GM. I think that there is a lot of volatility in Tesla, but the company itself represents a lot more than automakers, in my opinion. So I do have some trades. Actually, I have quite a bit of trades on Tesla, and most of it's just dedicated to income. I don't own any shares right now, and I don't really want to own any shares. This one is full profit for $2.28. This one's another one. As long as we stay above $250, actually, I break even around $245. So if we're above $245, here is greater than 245. If I'm greater than 245, I still have a break even trade. If I'm greater than 255, okay, greater than 255, I have a 217 credit. I'm going to keep an eye on this one because if we're at 250 to 255, then I actually have $717 of profit on that one. There is a profit trap there that gives me a nice little chunk of profit. And then for April and May, this one's same thing down to 255. This one's 245, same idea. So if we are around 250 to 255, whichever look at that price point, 250 to 255. I mean, we did pull back to 273. We do have a gap fill back here around the 240 to 220 zone. So it is possible that I may end up taking, assignment. I might take 100 shares of the 300 shares that are exposed. So if I take 100 shares, I might dump these for partial losses and then keep the shares and repair all of it. So if I took a loss on those, I don't want to have assignments on multiple 100 shares. I'll just take 100. And let's say that I lost $1,000 here, $1,000 here. Well, I work this one down to end up making me hopefully 3K or better. Right? So I have income here, turn this for a nice little $3,000 to $4,000 winner, and I can absorb those losses and just move on. Okay. What happens when jobless claims start to rise? I mean, that's probably the thing that's going to make this market go into a recession. I don't think the full AI displacement of jobs is going to be until later this year, maybe the next couple of years when it really starts to creep up. I'm not sure with the jobless claims right now if you're going to see federal workers start to pop up on the radar. The loosening in the job market. I've got a continuation thing here. It's Fed. Where's it at? Something with jobless claims. It's in here somewhere. Mortgages. Come on, watch list. I only go through this thing every day. That's advanced decline line above the 50 moving average. More stocks, sectors. What the heck? Did I get rid of it? Fed funds rate, 3-month, 2-year, 10-year. Those are all yields. Mortgage. Home sales. Okay. There is the adjustable mortgage. Here's the 30-year dropped to 6.76. More futures. Maybe here it is right here. Jobless claims. So initial jobless claims and continuing jobless claims. We got to zoom way in here. I mean, by historical measures, it's still quite low. Okay, we have claims coming in every Thursday. It's still quite low. There could be an uptick here in initial jobless claims. I just don't know if this is going to be the 200,000 to 300,000 layoffs in the federal workers. Maybe it is, maybe it isn't. But I do think there's going to be some labor market softening. Unemployment rate right here. We're at 4. That's the last print. So unrate. What's the difference? Unemployment rate 4.4 versus civilian rate. Okay, so we got 4.4 is the Bureau of Labor Statistics. This would be what's coming out during your non-farm payroll announcements. 4.4%. All right, let me drag this one up a little bit. There it is. There. So I've got jobless claims, initial, jobless claims continuing, unemployment rate 4.4, just a spot check. Yeah, I mean, all it's going to do is probably allow the Fed to loosen. I don't think the news has changed much in the Fed this week. We have a rate decision in the middle of the month, so March 19th, still a high percentage that the Fed's not going to do anything. May, unlikely to do anything. June, right now they're looking at a 25 basis points cut coming in June. Here's the probability table. Now the market's looking at 2 cuts. So June, September, December. Now the market's looking at cut 1, cut 2, and cut 3 for the year. Why is that? I don't know. We were told 1 to 2. Now the market's looking at 3. This is what the probabilities show. I think if the Fed is cutting here, I don't know if anybody realizes this, but you want to know when recessions usually happen? While the Fed's cutting rates. So I don't think that them cutting is a good thing. I think they'd be cutting into anticipated weakness, So I just think if we can kind of survive this, like probably now until August or September without having any major damage, or if there is damage to it, I'm just talking overall markets here. If there is damage to the overall markets, if there is a resiliency to it. So if we have some damage initially and then a resiliency, if I'm back up towards these highs for the year, I will be extremely protective and defensive going into the end of the year. Because if we're coming into a rate cut cycle, I don't know if that is going to give the market the boost that it wants, right? Why would the market rip and justify this comeback? That comeback would be because of the rate cuts. And this would be the 6 to 8 month forward thinking guidance that the market already has. Does that make sense? So I just think if we have a recovery, I want to be extremely protective of those profits and not give this market a reason to dump, right? And I'm not saying it's going to go down, up, down, but I don't think this market really does anything too exciting. So I don't see the market going to like gangbuster highs. I think the market, if we do have some pullbacks in here, I am expecting at least some type of recovery where at least the bulls get the upper hand to climb back up and try to revisit all-time highs. But yeah, I just want to see if I can recover. I know that my watermark for the year was around $195,000, and if I can get back to that with my P&L and anything higher, I'm just going to start removing positions, being more risk conservative. I'm not going to say risk off, but risk conservative, and making sure that I'm preserving some of the profits that I have to make sure I don't give much back. Would I sacrifice some of the upside? Yeah, maybe. Otherwise, I just keep taking a bunch of income trades, and but I've been like pretty active, and yeah, really routine, really active, and I'm positioning a lot through March and April and May. And if we can survive that without too much damage, I think we have more to come through. Like the pre-summer push is usually pretty decent, right? May, June, July, August is still like a positive month. September is always like a wild card. Usually it's down, but yeah, I would just be mindful. And also Q4. Like if Q4 is not a positive quarter, look out for 2026 to be bad. If Q4 is good, then sure, fine. But if Q4 is rough this year, that's going to be like the market limps in, maybe gives back some of the gains. I just think that spells a lot of trouble ahead in 2026. Next Friday, have an impact too soon, meaning what? Next Friday, non-farm payroll? I mean, it could have a starting point next week. I mean, the job numbers just keep printing, right? So we have next week, ECB expected to cut rates another 25 basis points on Thursday. ADP non-farm, Japanese yen. We've got PMI numbers coming out of the U.S. on Monday. That's at 8 a.m. So, okay. This is what I'm seeing next week on the calendar. Powell is speaking at 10:30 a.m. I don't know what he's talking about. Economic Outlook at the University of Chicago Booth School of Business, U.S. Monetary Policy Forum. Okay, fine. Plus non-farm payroll in the morning. So, I mean, the forecast is already out. It shows here forecast for 4%. and non-farm number at 156. So we'll see. I mean, is it still robust? Where are the jobs coming from? Most of this is the scary part. Non-farm, by the way, non-farm payroll has been healthcare, services, leisure, hospitality, and government. Okay. So if you axe government jobs right now, the rest would be healthcare, services, leisure, hospitality. Is that still where jobs can come? Yeah, because you're probably not getting jobs in tech. Tech is firing. Tech is cutting. Tech is looking to create higher margins. Investors may not like that right now, and we're getting a big rotation out of momentum growth anyway because they're overvalued. But if we're axing government jobs right now and it's essentially a hiring freeze, then what do you have left? Healthcare, services, leisure, hospitality. I mean, if people are still spending money, that's good. People are still taking vacations, that's good. I think people are still going to enjoy traveling, want to travel. It just depends on, are they cutting things elsewhere? Are they cutting, retail in order to take a vacation? I just think there's going to be a trade-off. I saw a headline today. Headline today shows Americans cut spending at most drastic level in 4 years. This is consumers cut spending. This is from Yahoo Finance. Tariff threats and uncertainty could weigh on consumers, drag down U.S. economy. This is ongoing tariffs, large blah, blah, blah. Americans cut their spending by 0.2% January the previous month. Says because of cold weather. Okay. Roller coaster news headlines. Reduction in consumer spending. Today was supposed to be a retail boycott. Yep. So companies likely sought to front run tariffs. Economy would shrink by 1.5% in annual rate January to March quarter, sharp slowdown from the 2.3% growth in the final 3 months of last year. Many analysts still expect the economy to expand in the first quarter, but at a much slower pace. Inflation declined. Inflation would keep cooling. Progress could be upended by tariffs. We've got 25% to Canada, Mexico. We've got 10% retaliatory or more on China. We've got 10% on oil from Canada. Wanted to double the current tariffs imports from China to 20%, on top of talking BRICS 100%. I think the reality is it's still a negotiating tool and tactic. It's a lot of kind of upfront talk. It's just a bargaining chip, but obviously it can escalate when it's just retaliation, and if it gets worse, then things get a little dicey out there. What else? Story continues. Okay, preferred gauge eases as overall inflation ticks up. We got core CPI, core PCE. Did we have PCE today, by the way? I totally overlooked that if we did. Did we have PCE? I thought that was last week. Oh, fudge, we did it. It was just as expected. Okay. Core PCE. All right. I totally forgot about that today. Didn't really matter. That was at 6:30 a.m. Is this the wrong time zone? What is happening? Somebody let me know. 9:26 a.m. Eastern time. Yeah, what the heck? This is so weird. Somebody tell me if core PCE came out at 6:30 today. Am I just taking crazy bills here? Or is this what actually happened? At 6:30 a.m. we had news? Or was it 8:30 a.m.? I'm on GMT -5, which is Eastern time. Let me check the Bloomberg calendar here. That's weird. Yeah, I saw that, Kirk. Yep. All your spenders are the top earners, right? You're the top 10% of America, 250K a household or more. You're buying about half the goods right now because you've got the spending power. Let me go to Bloomberg calendar and just go to today. So today at 8:30. All right, so it was 8:30. That's weird. Yeah, it's 8:30 a.m. Eastern time. Okay. So here is the core PCE month over month. Forecasted 0.3, came in 0.3. Core PCE year over year 2.6 came in 2.6. Previous was 2.9. That was revised from a 2.8. So that was revised up. Interesting. Year over year PCE, previous print 2.6 came in 2.5. Month over month came in 0.3. So you've got your core PCE index right here. Nope. Gosh darn it. Not change, index month over month. There's your 0.3. Okay, your quarterly is 2.7. United States PCE index inflation rate. That's not what I wanted to see. Anyway, I was just trying to look at like the actual reading. There's the 2.8 right there. Okay, I have it. That's I got on the chart. Let's go copy that. Okay, just another measure here. Put this in with the jobless claims. There. And the reason I'm pulling this one is, Fed funds rate at 4.25, 4.5. So there's your Fed window. We're flatlining right now on core PCE. This is why the Fed, and again, it's not the only data point they use, but this is what they say is their preferred measure. I think if things get too expensive, they'll just remove it from inflation readings. It's like, oh, eggs are expensive. Well, let's just take that out. Food and energy is already excluded in core PCE, right? So what else are they going to remove to make it so it seems like if they can fudge the numbers a little bit? But point is, if this is plateauing, and the Fed funds rate is here, this is what they are calling restrictive. So if this is going to go higher, the Fed really can't cut rates. If this goes lower, then they can probably lower this. And if this goes lower, they can lower this. And that's probably what they're doing. So the reason they went from 0 to now what looks to be 3 cuts this year is they are hoping to see that, in the near medium term, you've got inflation data improving. We won't know until we get the prints. We got a new month starting off next week. And I think week 2 we'll have CPI, PPI comboed again. And then we'll have PC at the end of the month. We'll see how Q1 ends up, wrapping up. It's going to be end of month, end of quarter. So, Q1, we're going to have some work. Let's go to the SPX and let's go to monthly candles here. So we started out this year. Here is December. Here's January. So for the year, the S&P is clinging to a sliver. Like this is basically flat now. So January to February for 2 monthly candles. Look at these candles, by the way. If this isn't just showing you what type of volatility we're dealing with, look at the body of the candle compared to the wicks. Like February was a crazy, crazy wick high, wick low, nasty month. It ended up finishing the month red. But it actually was a candle that was almost as large. So we had a candle that was, 300 points wide, and price ultimately went nowhere. We actually finished down for the month, but I don't know. It just gives us a lot of head fakes. Are we going down with sustainability direction? Are we going up with any sustainable direction? I don't know, right? But the market right now is difficult, and it's not a huge surprise. Okay, so where are we? I still think there still might be some pain ahead. I would be looking for some resistance around this like 6,000 handle. There's been a lot of structure in here on the SPX. If we come back up to 6,000, but we can't get above it, I think 6,000 has another flush down. We find this moving average. We go for maybe the overshoot in here, and I start taking nibbles to the upside. 59.20. That was the alert that I did yesterday. That cost me $1,450. But anyway, today's looking good. We're still heading higher. 59.20 was that my call side this morning? Yep, call side this morning. So that's over and done with. That was a profit trade today. And then I have the 6,000 level, which we're nowhere close to that. So anyway, I should be able to let this SPX trade over the weekend. Just cash settle here. 1, 2, 3, 4. Right now I'm maxed out. So 120 bucks. Can I close it? I can close it for 5 cents most likely. Take my profit or let it settle. Oops. So nice little winner right there. I'm going to take the win on daily profit play. So that is a winner and a winner. We have good. Okay, just updating my tracker. All right. A lot of trading this week. That is 12 for 15 or 13 for 16 this week. Oh, that was a grind. That was a grind. All right, what else we got? A few more minutes, let that settle. Indexes, dollar index, somewhere in here, gold, silver. Here's my dollar index. We now have 3 days bid on the dollar off that 106 support. I don't think the dollar is necessarily going, all the way back up to new highs, but if the dollar catches a bid, is it going right back up to where it started? Right? We had this huge swing from September into this year. So do we just have a range trade on the dollar? Curious, going into next week, do the 10-year yields continue to weaken? I would love to see them do that. This is actually a nice progress from these highs, 4.8 down to 4.2. That's 60 basis points off. It'd be nice to see yields going with it, hopefully. So if that is the case, then where are the bonds at? We got TLT making fresh highs. I think I'm going to check and see if I can close this. So TLT is it's a diagonal spread. It's just a bond play for me. Little hedge for the year. Currently up around 11 grand on bonds. 92 is my cover. Okay, so let me go individual accounts. So TLT right now is up around 1468. I think my max profit on this is going to be, yeah, I'm only up about, oh man, there's so much. No, that's not right. Okay, hang on. So I can max this thing out around $27. Straight around 25. It's not bad. I don't think I'm going to wait all the way to April. So the sell side of this is in April. If we are, nicely above 92, I don't know, let's say we get up to these, there's a ton of gaps in here. So even pushing higher, I'd love to see this thing at like $93, $94. I'm going to try to close this out as close as I can to $27. If I can close it for like 26 or better, I'll probably just take the profit. So the way this one works out would be a max profit of 27 times 400. Okay, and actually that's not correct. So 21.25, close it for 27. That's my net profit. And times 400. 21.25 minus 27 times 400 times, there we go, 2,300 bucks. Okay, so if I can get individual counts over 2 grand on the trade, I'm probably going to take the profit. We have ourselves an interesting comeback for the rest of the day. Nothing like the market finding an old gap and giving it a reason to rally. I have no idea what's going to happen next week. Is today just an end of the month movement? Are we going to come back up and see a lot of resistance here. I think this 6,000 to 6050 zone to me is still a big resistance area. So the bulls have a lot of proof. I'm still not super convinced that we get long unless we're above that trend line. But if we came up to like 6,000 or 6050, I could see this market wanting to try to justify these highs. I don't love that we are that close to the bar count and didn't hit it yet. So next week's going to be interesting. Maybe this little run up here is just a setup for another fall next week. You know, we started on a rough patch. It's like what makes March 3rd all of a sudden way different than the last week when this thing was down. You know, we're down 5% in the last 2 weeks. And somehow today it's like, we're going to go up like 1.5% from the lows. It's up 1.83% from the lows. Crazy. It's up 120 points, man. Wow. So, all right, we're going to see what happens because if next week sets up for another setup for failure, we could see some resistance there, and it's right back in the same boat of like, oh boy, buckle up. If we break and get above the trend line, then sure, maybe the bulls and bears can fight it out a little bit, and we'll figure out what's next. So we'll grind, and we'll grind, and we'll grind, and we'll figure it out. That's a late move in futures. Wow. 2 p.m. afterwards, that's a big futures move. But that's the market. Just happy that directionally I picked it all right today. All right. Any thoughts, any questions, any requests, any charts you want to take a look at? Let's take a look at the FinViz map today, see what's going on. Fed looking at 3 rate cuts this year. Calendar, we did have PCE this week. We have non-farm payroll next week. Let's go to the heat map today. We've got 60% of stocks advancing. We are still less than 50-50 above the 50 moving average. We're still barely clinging to a bull market above the 200 moving average at 51.2%. A lot of green today, though. So Tesla kind of leading the way for Mag 7. Financial-wise, doing really, really well on the insurance side. Credit services, banks, financials doing really well. One of the best performing sectors of 2025 has been financials. What else? You know, NVIDIA stopped the bleeding a little bit. We had earnings this weekend. NVIDIA didn't get the market overly excited. Yesterday was a pretty nasty sell-off, but stabilizing today. Apple coming back in a big way. And this market, what a run. Look at this thing. That is a big candle right there. And I don't know, I mean, realistically, I could see this as just like a lot of big money was caught off guard on Thursday. And what are they doing? They're trying to get neutral and probably dump out of here to limit some of the losses. And then there'll be neutral positioning for next week. I mean, I see that, right? I mean, just a little manipulation move at the lows, come back up here. Everyone that was caught off guard yesterday is now okay with a Friday close and end of month. And then next week is a new week. So is this more of like, you know, get yourself out of trouble and then renew selling pressure? Or is this a, hey, that was it? That was a 5% correction. The market's done. You know, I think there's more pain ahead. I think there's more sliding ahead. But I'll be watching. So between this like 6,000 to 60-50 zone, that's probably my biggest caution zone. But I'm watching this, you know, this kind of same area that we had with a little bit of chop. So if we're coming up here to then hesitate and then sell back off, then we'll renew. But I'm not going to complain. We got a nice little P&L swing on the day, back over 6 figures on the year. Feels a lot better than what it was earlier. 10-year sliding lower, that's good. Slide all you want, 10-year yield. Okay, what a wild day, huh? Good thing I wasn't trying to get directionally neutral for the final couple of hours because that would be brutal. All right, that's the close. I just had my SPX close for $120. And that thing can settle. So there's my max profit right there. Daily profit play, that was a winner. waterfall trades. We'll revisit all these on Monday. Okay, these are in good position. Today certainly helped kind of alleviate some of the pain. And, XSP, I've got a lot of positions here. I had about a $500 swing. So this is helping. I was down like $700. Now I'm only down $200. And all these positions for me look pretty darn good. This is a new waterfall that I put in today. There. So I have XSP. Hang on a second. Oops. April 17. 520. That's all. This is 1, 2, 3. I got to group those together. Cripes. Hang on. I don't want that one grouped all by itself. What are you doing? Ungroup. There we go. Okay. So this 1, 2, 3, 4. Group these together. There we go. So now 1, 2, 3, 4. 1, 2, 3, 4. There we go. All right, looking good. So keep an eye on those. Bull puts for profit. Waterfall still running. SPY closed out a profit today. This was a 111 trade. Closed it out for a nice winner. That was up $600. Micro. This one was up. I'm going to let this one run. This is still that side of the trade. If we have more pain to the downside through March, April, if we hit the 200 moving average, this trade can pay out like $2,300 for a max risk of like maybe $500. So I still have some hedges running, and then a nice little 111 up $360 on futures. So closing out, got back into six figures, which I'm pretty happy with. I still know that 195, 196 is my watermark for the year. Up 16 grand today, which is a big swing. This has been crazy. Like I was down, 15 grand, up 5, up 10, flat break even, out 14,000. Just a lot of swings going on. So we keep taking our chances at bat, and we keep taking swings. I just want to see some fat pitches. All right, that being said, happy Friday. If you'd like to join me on Monday, I'm going to have a special final hour session on Monday. I'll be hosting Tom Busby from Prosperity Pub. He and I are going to tackle the markets at 3 p.m. So we'll kick around some ideas, what he has planned, how he's trading. Is he also rotating out of some of the scarier stuff? Is he just generating income? What's his style? What's his go-to? So Tom and I will be on Monday at 3 p.m. Okay. All right. Any other questions? Otherwise, have a fantastic Friday. Enjoy the weekend. Shrug it off. We'll see what happens next week. It's a new month, clean slate. Whether it's good or bad, we'll find out. I'm still bracing for some potential downside as I post here in Telegram. Just be aware that this isn't done. So there's the Dow. If we find the 200 moving average, there's the QQQ. If you find the 200 or lower, there's the SPY. If we found the 200 or lower, the bar count's there. We've had a nice little run to it. So why not just get it over with, man? Like, honestly, I'd be a much happier bull getting that 200 moving average or this. If I get to trade in that yellow box, I'm a much happier trader this year. I think my least favorite would be this. Goes back up, comes back down, goes back up, comes back down, goes back up, comes back down. That's going to drive me crazy. And eventually, when this moving average just keeps going and going and going and going, my concern is that when this thing actually ends up coming to it, we're actually going to start rolling over, and this is going to be a rounded top. And that's going to be the bear market that nobody wants to actually trade through. I'll trade through it, but I'm saying, I don't want this market to be just chop suey. It's okay, but it doesn't let you really do a lot of positioning that you want. If we get a nice run back to the highs again, I am dumping a lot of positions for partial profits and moving on, tightening up, raising more cash, doing more income trades. So we'll see. But if we end up just having a little bit of recovery and then falling back down, I'm okay with that. Falling, whatever. A nice orderly fall would be great, and then we'll see if the market can pick itself back up. dust it off, get back to all-time highs, get something, get excited about something. Get excited about timing the market a little bit. What type of option trades works best with falling markets? I mean, honestly, hedges work great. So bear put spread has been extremely profitable for me these last few weeks. So when we hit all-time highs, I bought a put and then I sold a put down here. So I bought a put and I sold a put, and it cost me about $5 to get into the trade for a $20 to $30 gain. So I mean, it's a trade intentional where it's like, look, I'm kind of calling the top here, but I went out about 60 days, and this last week it's been extremely profitable. So I closed out some hedges, some not. I'm letting some run, but that's to me been the best trade when the market is down, is just protecting. Now there's two ways, right? If you see the markets are falling, there's ways to just trade through it. I mean, some of my strategies I'm going to trade regardless of the market going up or down, and just try to grind out some income. Others, like this, timing wise, it's like I was a little bit more bearish going into those trades, and so I was hedged on SPY, I was hedged on ES, I was hedged on MES, and those were just bear put spreads. So I bought a put and I sold a put, and that's the trade that I'm going after. When we hit a new high here, I bought a put and I sold a put, and that's the trade that I'm going after. So those are still working. They're nicely profitable. They're offsetting some of the losses. So I mean, I have right now about like $15,000 in hedge profits that I haven't closed yet. And the reason I'm doing that is because if it still goes down, it becomes about 25K to 30K in hedge profit, which helps offset some of the ugliness, right? But that to me is, I mean, it's defined risk. Obviously, you can buy puts and you can get paid on long puts, but I don't like to overpay for my options. So I don't just do. Usually, I'm not a single leg. I'm not a single leg trader when it comes to buying options. I usually put in a spread. I'm trying to think what other ones. That's about it. The ones that are like out there for the outlier would be like a way out of the money put. If I bought a like a 10 delta, a 5 delta put, and it's dirt cheap, but you got to have the market just dump. You'd have to have something like this, like that move or that move. You'd have to have the market dump, and you get like a, if a 5 delta can grow to a 20 delta, well, that makes things a little bit more interesting because you have a huge gain. You have about a 400% gain on a position like that, right? Which is pretty good. But the payout of that is about a 5% winner. So you don't really get paid a lot on those way out of the money those way out of the money puts, but they're there if you need them. If the market is really really ugly, then they can help a lot. But otherwise, it's just a paper cut, and you hardly ever get paid on them. So my style is mostly bear put spreads. I hedge a lot with those. They're pretty cost effective. I usually put in about 1/4 to 0.5% risk, and I'm willing to sacrifice it. Because if it works, it works, and it helps me make about 1 to 2% for the entire portfolio. And if I sacrifice it, I sacrifice 1/4 of 1% or half of 1%. So I think that's a fair trade-off. And if I hit, once or twice in the year, and I get 3-4% of boosted hedges versus only sacrificing about 1% of hedges, it could be worse. So at least it helps trim the drawdowns a little bit. Okay. All right. That being said, have a great Friday. Okay. I will check you later. See you Monday. All right. Thanks. Bye.